morning, Jean-Philippe.
Good morning.
Thank you for accepting this chat about microfinance funds.
My pleasure.
Microfinance has been a popular topic in the last years and has been in the limelight, of course, with the Nobel Prize given to Mohamed Yunus, the founder of Grameen Bank. But tell us, can microfinance or microfinance funds also be interesting for private bankers?
Well, absolutely. First of all, microfinance is a booming sector. It's an exciting industry. It's essentially a commercial approach offering financial services to an unserved segment, the working poor of the world. It's a great investment opportunity, great microfinance institutions delivering the financial services, great credit risks, steady returns, and we can talk about that later. And therefore, for private banking clients, great investment opportunity with a dual return, social impact and financial returns. So absolutely yes. And then for private bankers, a great way to maintain relationship with their clients, offer them an exciting alternative investment opportunity and an opportunity to do well and do good at the same time. So yes, absolutely.
Recently, some researchers showed that microfinance has little correlation to traditional markets, which would obviously make it interesting to portfolio managers to diversify their investments. What do you think about this?
I fully agree with that. When you look at microfinance and the way it's organized, you basically talk about very small companies, micro enterprises worldwide in emerging markets. They're grassroots. And we have seen that during economic crisis or financial crisis at the macroeconomic level, this sector is really faring well. Commercial banks going bankrupt, microfinance institutions booming. So I would almost say that there's a counter-cyclical evolution of microfinance with macroeconomic shocks, and therefore a decorrelation from the microfinance industry and other asset classes. So having microfinance in your portfolio is a great investment diversification tool. I really believe that.
So we saw a little bit the diversification aspect. Now let's talk about performance. How do these funds perform in relationship or compared to more traditional funds?
Well, comparing is difficult because you achieve another purpose, and it's definitely a different segment. But just to give you an example, the Dexia Microcredit Fund, which is a fund where we've been managing for now 9 years, made over 450 loans with this fund, never had any default, and we have systematically delivered the LIBOR plus 2% in dollars net of all costs to investors, which would come today about 7.5 to 8%. So that's a steady return. We have absolutely no volatility in the returns. So today we have private investors, private banking clients coming to our funds, but also institutional investors such as pension funds and insurance companies investing in a big way in microfinance, because precisely it's a low credit risk, it's a decorrelated asset class, it delivers on a non-volatile basis a LIBOR plus type margin in dollars, and so yes, it's a great investment opportunity. Yeah.
Now, some critics think that microfinance or microfinance funds are not scalable. How do you counter this argument?
I fully disagree with that. Obviously the name of the game in microfinance is market expansion and market capacity. When you think about it, the target market of microfinance is basically 4 billion people on the planet. Let's take 500 million micro-enterprises of those, and that's a conservative estimate. Let's take again, as a very conservative estimate, $500 of credit needs per micro-enterprise. You talk about a potential credit market annually of $250 billion. Today we talk about 5 to 6 billion total market. So just to give you an idea of the potential exponential growth of the microfinance industry. Today we have, we're managing at BlueOrchard $500 million. It may seem tiny compared to the market needs, but we started with 10 million 6 years ago. So again, there's a lot of upside, and I don't believe in the argument that microfinance funds are not scalable. It just takes a lot of work and a lot of people to go around the planet and find the great microfinance institutions, but they're definitely scalable.
Now, as the last question, I would like to know from you if you see privately financed microfinance as an alternative to government investments in development.
Well, it's a must, right? Again, if you talk about $250 billion of potential credit market, and I'm talking about credit, and now think about insurance, credit cards, savings products, etc. But just on the credit market, no way public money, subsidies, charity, governments will ever cover the needs of this market. The only place where you find this money is in capital markets and in private banking. So yes, private money is the driver for development, for economic development and social impact, and that's what BlueOrchard is all about, is making a link between the capital markets and the microfinance world. Microfinance is just one more segment of global finance. You have sovereign, you have corporate, you have SME, and now you have micro.
Jean-Philippe, thank you for this interesting discussion.
You're welcome.